Hey everyone, Mortgage Nerd here. So if you're a first-time home buyer, the best way to achieve wealth in real estate long-term is what I'm about to tell you here. What you want to do is you want to buy your first property. It doesn't matter if it's a one-bedroom condo, two-bedroom condo, townhouse, small single family, whatever it is, it's your entry-level home. Maybe you qualify for Hometown Heroes because you're in the healthcare profession or education profession, police officer, firefighter, military, whatever the case may be. You might be able to come in with zero down or a very small amount of money down, maybe just pay your closing costs. There's different ways of looking at the Hometown Heroes. But for those that don't qualify for it, you can still do this. One way is through FHA. That's what you're going to hear most people tell you. Usually the lenders that start with FHA because they make more money selling you FHA. FHA is not the best option. Yes, FHA's mortgage insurance premium, the PMI, MIP that you pay monthly has come down. It's almost even with conventional, and the FHA rate is lower than conventional, but FHA has an upfront or initial mortgage insurance premium that adds to your loan amount, so you owe more. You owe almost 100%, even though you're putting 3.5% down. Conventional does not have that. Conventional does have 3% down. Now, of course, if you're buying a multifamily like a duplex, triplex, fourplex, FHA is the way to go because conventional is 15% down, even if you're going to live in one of those. So I digressed about different mortgage types and property types, but the point is, you buy that primary residence with very little down. But remember, you're buying something smaller. It's your beginner home. Then in a year, 2 years, 3 years, whenever you're ready, it's time to upgrade. Don't sell your property. So many people I see sell to take their equity to upgrade. That's not the best way to do it. Yeah, you're going to get the better house that you want right now, but remember, we're talking about long-term wealth building through real estate. So you're buying that second primary, that bigger home. Maybe you had a condo or a townhouse and now it's a small single family. You're buying that single family, you're getting in the door there, you're renting out the previous one, you're cash flowing, it's paying itself at the very least, and now you're in this house for a few years. Then you're going to do the same thing. You're going to have that domino effect. Early in my career, I had clients in their 60s and 70s that were refinancing or financing one of their properties, and I see their portfolio properties. All I could think is, this is the way to do it. Bunch of properties that are paid off, all of them are paying you money every month. Yeah, the rent right now might be $2,000 or $3,000 a month, but what's it going to be in 30 or 40 years? Or 20 years? It's going to be a lot more, that's for sure. So if you have 5 different properties paying you $3,000 a month each, or average, that's $15,000 a month. Way more than you're going to get in Social Security, way more than you're probably going to get on your IRA or 401k, maybe, but that might be even more than $3,000 a month at that time. This is the best way to build wealth long-term through real estate, especially for first-time home buyers. A lot of options for us to take advantage of. Let me know. Be happy to dig deeper on your scenario to see what you might qualify for. Mortgage Nerd out.